What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we finally saw that big bounce after we hit that very critical support level at 297 on the triple Qs. Tonight's going to be another very educational episode and I'm giving you everything you need to watch to know when this correction is finally over and what to expect coming off of this bounce. So first up, let's take a look at the NASDAQ 100 triple Qs ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so first up, if my episodes helped you this week navigate this tech correction, please do me a favor and smash that like button so we can help more traders and investors see this content so that they can also better navigate this market. We're all in this together and we're all a community trying to make money, so please help spread this educational content. Alright, so on the triple Qs, if you've been following along, you already know this, but we've been waiting to see how this ABC correction would play out, and it did look like today that we could have possibly seen the bottom. So remember, we're starting out on the daily chart, and this is a daily time frame that I'm talking about. So ever since we hit the all-time high around 337, we did start into this ABC correction, and if you've been following along for a couple of weeks, you remember I said that it's going to take a few weeks to play out, and it's going to look something like an ABC to the downside. Well, fast forward to today, and it does look like we're finally near the end of this ABC correction, which means we need to start looking at the possibility that we could be going back into a bull market. So there's a lot that we have to go over tonight to show you why this correction could be over, but it's also important to note that we're still in a downtrend on the daily chart, and we're still not going into a bull trend until the price action confirms it. So we don't want to take anything for granted, and we don't want to guess. If you've been following along, you know that you have been very informed throughout this correction if you're paying attention to what I'm saying and looking at all of the possible support levels that are going to be critical, because the price action and how it behaves at these levels is going to be 100% the most important thing you need to watch. So keep this ABC correction in mind on the daily chart, because I'm going to switch over to a 30-minute chart and we're going to break down the wave structure one more time. Okay, so we're now on a 30-minute chart, and in the ABC, we're expecting 5 waves down for the wave A, 3 waves up for the wave B, and then another 5 waves down for the wave C. So looking at this chart, we're going to go ahead and count our waves down for wave A, and we did get 5 waves down for wave A that we did see completed. On the way back up, we're counting 3 waves up for wave B, and we did get a confirmation that we did get 3 waves up to complete out that wave B. So we knew we had one more leg to the downside, and if you remember on Monday, that episode was titled Bull Trap because it was going to look like we were going back to all-time highs just in time for another leg lower. So hopefully that helped you out if you saw that episode, and as we're now going to count, we did get that final 5-wave structure to the downside. So if you're on the Stocks channel Discord, I was very focused on this 297 level, and I said if we did break down below 302, that we were likely going to test that 297 level. A lot of you took that information and made a lot of money today with it, because after we hit 297, we did get a huge bounce and we closed all the way up near 309 for the close. So that's a nice $12 bounce, which is not too shabby. You just had to take this information and then be patient. We knew we were counting 5 waves down, so there was no reason to get overly bullish until we completed that 5th wave. So right now, coming out of this completed 5-wave structure, that means that this correction could be over, and that does satisfy the ABC. So that's very important to pay attention to, because coming out of a correction, we could go back to the higher degree trend. And if you look at a weekly chart and on a monthly chart of the NASDAQ 100, we are still in a bull trend. I'm going to do a more macro level view of the stock market on Sunday. So if you're interested in that macro level view, do come back on Sunday for that episode. But right now I want to stick to the daily chart in the lower time frames, because it's very important to understand what's going on day to day, and it's really going to help you better navigate this market if you understand these wave structures. So right now it's still possible that we're going lower in this market because we are still in a downtrend on the daily chart. That is very important to remember, that when we're in a downtrend and the price action is closing below the 50 EMA on the daily chart, we want to remain defensive, and we want to remember that we're still in a bear market. On the daily chart for the triple Qs, yes, we are in a downtrend, and a downtrend is defined by a bear market. So the next thing I want you to pay attention to is this possible 3-wave structure to the upside. I do have this resistance trend line, which is this red line here, and I do expect to see the price action try to break through that level. Remember, this 3-wave structure is going to the upside because we're correcting the 5 waves down. So an ABC always goes in the corrective direction, so in a downtrend, the 3 waves are going to be to the up direction. Just like we saw with wave B, we're expecting something very similar to finish out the end of these 5 waves. So don't be surprised if we see some selling early into next week, but I would expect to see some support somewhere around 302 or possibly even higher before we bounce and then ultimately come back up and try to test this breakout. So I want to go over this breakout yet again because it's very important that you understand how this plays out. If you're looking for a bull market to continue after this correction, we need to see a confirmation of the breakout, a test of the breakout as support, and then a bounce and a higher close on the hourly chart. That will show us that we're going back into a bull market and we're going to be back on the bull and we're going to be looking for trades to the long side. This is the scenario that you need to watch for the price action to be bullish. Remember, we know we're going back up to test resistance and we know there's two possible scenarios. Either we go back into a bull market to resume the higher degree trend, or we're going to get rejected at this resistance and we're going to continue the downtrend. So that was the bull scenario, and now I want to go over the bear scenario. In a bear scenario, we're going to come back up to this resistance level. And by the way, where I'm drawing the C wave is just for reference, but it does happen to land right around 317 on the triple Qs. If we're going to remain in a downtrend, we're going to see the price action get rejected at resistance, possibly retest that resistance level or the trend line yet again, and then get an hourly lower close on the price action. So that low will take out this low here, and that will confirm that we're going to remain in this bearish downward trend. So going into early next week, I want you to watch the price action very closely, and I want you to watch how the price action behaves at this resistance trend line. I'm going to be giving you intraday updates on the Stocks Channel Discord so that you will know exactly which scenario plays out. If you're not quite sure how to do this analysis on your own, you might want to consider joining the Discord where I give you live updates on exactly what the price action is doing. But this is what I'm watching for, and I want you to be 100% prepared for these scenarios. Remember that nobody can tell the future, but the price action cannot lie to us. Whatever we see the price action do at this level is going to dictate whether we go into a bull market or remain in a bear market. So that's the educational portion of this episode, and remember that the tech correction is driving the S&P 500 lower as well. So if the tech correction is over and we're going higher, I would expect to see the S&P 500 going higher as well, and possibly even forming brand new all-time highs. So it's very important we get this right, and it's very important that we don't do any guessing, and that's why it's critical that we let the price action show us what's going to happen. Okay, so let's go ahead and get into the technical analysis portion of the video, and we'll do the triple Qs while we're already here, and we did go back to the daily chart. We saw the price action on the triple Qs going up 1.5% today, which is actually really good considering intraday we were all the way down at 297. So an intraday swing of about 3.77% is a very volatile day, and it did go in the favor of the bulls today. If you bought the dip today, you were handsomely rewarded as soon as the close. So overall, that was a positive sign that we likely saw the bottom of the correction, but we still want to remain defensive because we still have a bear trend. We know we're in a bear trend because all of the moving averages are negative sloping, and we're trading below the 50 EMA. When we're below the 50 EMA with a bear trend, we don't want to be bullish. We could still take bullish trades off strong support levels, but we don't want to be a long-term holder on the stock market while it's in a downward trend. So it's very important to understand that when the market is bearish, you can still trade to the long side, but you don't want to be a long-term holder until we see a confirmation of a trend break. So right now, remain disciplined and remember that we're in a downtrend and you don't want to get overly bullish when we're in a downtrend. It's still possible that we go much lower, and that's why it's so critical that we continue to watch this resistance level. So as far as support levels go, watch 307.50, 302, and as you now know, the support level down here at 297. As far as resistance levels above, we're going to pay close attention to our resistance trend line. That's the number one resistance level that I want to watch right now, and it is a trend line, so the price will depend on when we actually test that trend line. Right now, it looks like it's going to be somewhere around $314 to $316 when we get up to that level. Don't forget the 50 EMA is also resistance, which is right around 317. You can see that we still have a lot of volume in this market, and a lot of it is still selling volume. So eventually we will see buyers stepping in, but we want to be very disciplined and patient in this market, and we don't want to take anything for granted. On the S&P 500 SPY ETF, we went up 1.84%, and we did find resistance right at that 13 EMA, which is right around 385. We did close over top of the 5 EMA, but we still are in a short-term bear trend. The good news on the S&P 500 is we actually close over top of the 50 EMA, which is actually a bullish indication. So the price action on SPY is actually still looking relatively good, even though we are trading below the 20 simple moving average. So as far as resistance on SPY goes, watch 384 and the 20 simple moving average at 387. If we can reclaim the 20 simple moving average and get a price action close over 387, That's going to be a very bullish indication that the S&P 500 could go back to new all-time highs. Watch support levels below at 381, the 50 EMA at 380, and then that gap close support right around 377. Remember that the tech correction is also driving the S&P 500 lower, and if we see tech regaining strength, it's likely we'll see the S&P 500 rapidly going higher because some of the other sectors are still bullish in this market. Jumping over to the Dow Jones ETF, we saw the Dow Jones going up 1.83%, and the Dow Jones is still looking the most bullish of all three indices. We're closing above all of the moving averages, which means the price action is bullish. We're still trading over top of a positive sloping 20 simple moving average, and we did find support around the 50 EMA intraday around 309. So right now I want you to watch support levels below at 313 and the 20 simple moving average at 314. Resistance is going to be above at 316 and the previous all-time high up there at 320. Remember that the Dow Jones is looking strong because we're still seeing strength in financials and industrials. This is a good sign for the overall health of the stock market because it does tell us that the majority of the stock market weakness was in a sector rotation, which was just causing volatility and panicking. Don't get overly bearish on this market when the Dow Jones is still showing strength. Remember that I said the tech sector rebounding from a correction will also strengthen the S&P 500. So overall, there is much greener pastures ahead, and it is looking like next week could actually be a very bullish week. So remember, that's just speculation. Let's let the price action tell us for sure, but it does look very probable that we could have a very bullish week in the stock market coming up. On the Arkk ETF, we went down 1.15%, so we still see weakness in Cathie Wood's ETF here, but the good news is we did find support at the support trend line around 110, and we did close on top of support around 117. So even though this ETF is showing weakness, if the rest of the stock market is going back into a bull market, we'll likely see the Arkk ETF showing bullish strength yet again. So continue to watch these supports at 117 and 110, and the resistance above is now going to be at 124, our resistance trend line in the 50 EMA around 135. Remember that if you're bullish on Cathie Wood stock picks in the long term, the Arkk ETF is what you want to have because it is a great long-term hold as long as you believe that Cathie Wood is making great stock picks. On the VIX, which is our fear indicator, we saw the VIX getting obliterated today, going down 13.69%. It looks like the VIX found support right above the 50 EMA, which is right around 24, and we still are in a bull trend on the VIX. So remember that we're not out of the water just yet, and it is still possible that fear comes right back to this market and we see more selling at any point. So don't get overly complacent just because we had a good day today, because it's still possible we see more selling. But if the VIX continues to head lower, that does mean that fear continues to leave this market, and that will help us go to brand new all-time highs. So right now, continue to watch the resistance levels on the VIX, which is right around 26. But if we continue to close below 24 and start heading back to 20, that will mean we're likely going back to brand new all-time highs. On the US dollar, we continue to see strength, and we did blast right through that resistance at 91.79. The next resistance level to watch on the dollar is going to be up here at 92.26. Remember that a strengthening dollar could bring issues into the stock market, so we really need to continue to watch the dollar for what it could potentially mean in the longer term. In the short term, I don't expect too much with the dollar because it's still relatively weak, but we should keep a close eye on it. On gold, it looks like we are finding support right around that 1687 level, and it does look like we could be bouncing from here. If we do bounce off support, look for the next price target to be up here at 1760. On silver, it looks like we're barely holding up above support at 25, and if the support level does hold up, our price target is above at the 50 EMA, which is around 2635. On Bitcoin, we're continuing to watch this possible ABC correction and continuation of the bull rally, and as you can tell, we are building some bullish momentum below resistance right around $50,000. If Bitcoin can break out of 50,000, it's going to likely head up to our price target around 55,000 in a flash. The price targets above I want you to watch on Bitcoin are this $50,000 level, this $55,000 level, and then above there is our previous all-time high around 58,000. Remember that with Bitcoin, it could go down in a flash, so don't forget to watch the support level below, which is the 50 EMA. That level is now somewhere around $43,300. On Amazon, we had a very volatile day, but we did close in the green, going up 0.77%. It looks like that support level around 2,900 did hold up, and we did close above this 2,950. Resistance is going to be above at 30.33 and then the 30.90 resistance level. On Tesla, we continue to see selling, and Tesla went down a whopping 3.78% today, which is not a great sign on a day that the stock market actually went higher. It does look like we're possibly finishing out a fifth wave to the downside, and we did potentially find support at that 557 level. However, if 557 does break down, you want to watch the next level below around 510. Resistance levels above are going to be the previous support at 618 and then our previous price target around 685. On Apple stock, we went up a little over 1% today and we're back to closing over the support level at 120. Remember, in Apple, I did have it going down in 5 waves and I did have wave 5 potentially ending at 114. However, with wave 5, it's always possible that it could truncate and we could have actually seen the bottom of wave 5 around 120. That is a bullish indication when wave 5 truncates because it means buyers are stepping in sooner rather than later. So if Apple is completing wave 5 to the downside, it's likely going higher in 3 waves, which is going to be very bullish for the broad stock market. Apple is a market moving stock. So if Apple is going higher, it's going to drag the whole entire stock market higher with it. On Apple, watch resistance levels above at 121 and 124. On the financial sector, we continue to see strength going up 1.9% today. We're still closing over top of the 5 EMA, and we still have an extremely strong bullish trend in the financial sector. On the industrials, we went up 2.37% today, and again, a very strong price action sector with a very strong bull trend. On the energy sector, we went up a whopping 3.74%, and again, this is one of the strongest sectors that we've seen as of late, and we are trading well above the 5 EMA with a very strong bull trend. So as you can tell, there's still a lot of strength in the financials, industrials, and energy sectors. That strength is going to translate over to brand new all-time highs on the S&P 500 as soon as the tech sector gets its act together and starts heading higher. On the healthcare sector, we went up 2% today, but as you can tell from the chart, we're still looking bearish below the 50 EMA with a bear trend. If the tech sector and the healthcare sector can get back on the bull, the S&P 500 is likely going to continue to scream higher. So going back to the S&P 500, you can still see that we have bullish sectors in the industrials, financials, and energy. The tech sector could be ending a correction and going back into a bull market, which means we could see the S&P 500 going up in a very quick fashion to brand new all-time highs. So remember, we need to continue to watch that tech correction because it's going to be so critical in telling us which direction this market's going to go. I do have reason to believe that the tech correction could be over, but I still want to remain defensive as long as we're in that bearish trend. Remember that price action is key and that we're going to continue to do objective technical analysis right here on the Stocks channel. Also remember, if you want live intraday updates and you want a disciplined stock trading community, come check out the Stocks channel Discord. You can find out how to join the Stocks channel Discord by clicking on the link in the description of this video. Remember to stay disciplined and continue to watch these support levels very closely. So next up, let's take a quick checkup on our hot stock, which is still Lockheed Martin. And we did see Lockheed Martin going up 0.64% today. It looks like we're still trading above our first price target around 340, which means our next price target above is 344. If we break over 344, look for us to hit our third price target at 348. Support levels are going to be below at the 20 simple moving average at 339 and our previous support level around 333. So happy Friday, everybody. I hope you have a great weekend. And remember that I will be posting a macro level view of the stock market this Sunday. And as always, I will see you in the next episode.